If you're over the age of 62, then you gotta stop scrolling, because I am going to talk to you about why Suze Orman hates reverse mortgages. Number one, the high fees. Reverse mortgages can come with high fees that eat into the borrower's equity over time. Suze Orman has criticized these fees, which can include origination fees, mortgage insurance, and closing costs, as a significant disadvantage for seniors who may be trying to conserve their wealth. Number two, reduced inheritance. When a homeowner takes out a reverse mortgage, the debt increases over time as interest accrues. If a borrower dies, their heirs may be left with less equity in the property than they expected. Number three, she thinks it's complex terms. Reverse mortgages are pretty simple, but Suze Orman says they can be complicated financial products with many terms and conditions. Suze Orman has argued that the complexity of these products can make it difficult for seniors to understand exactly what they are signing up for, leading to potential misunderstandings. Suze, that's what we have reverse mortgage counseling for. That's what the sessions are there for. Risk of default. Suze thinks that because a reverse mortgage borrower does not make payments on their loan while they are alive, the balance can grow rapidly and could potentially exceed the value of the home. Yes, that's true, but that's why you have the FHA insurance, which protects you and makes it a non-recourse loan, so you can never owe more than what the home is worth. She says this can lead to default or foreclosure if the borrower cannot pay the balance, which Suze Orman has cited as a significant risk of this type of loan. Suze, most people that have a reverse mortgage die in that home, so the heirs inherit the property, and they are the ones that are left to either refinance the home from the bank, buy the home from the bank, or sell it on the open market. It's very easy, and if the balance is higher than the home's value, then guess what? They can just write it off and write it back to the bank. It's pretty simple. And lastly, she talks about impact on government benefits. This is something I agree on, because if you have Medicaid, it could impact you, but that means that you cannot have that money in your account for a long time. Depending on the structure of the reverse mortgage, the loan proceeds may be considered income, which could affect the borrower's eligibility for government benefits, such as Medicaid or supplemental security income. Suze Orman has suggested that this could be a drawback for those that rely on these programs. I don't disagree with that, but the government only checks your accounts from time to time. So if that money is not there, the money's not there. Do what you want with this information. It's completely up to you. But I still think a reverse mortgage is a great option for a lot of borrowers, as long as they talk to a professional and as long as they understand how the program works. I cannot tell you how many people I have helped obtain reverse mortgages, and they have told me this is the best thing